you are interested in doing an accounts receivable aging report, companies want to know if their sales are being paid and if they're being paid on time. And that is going to be affecting their cash flows and their ability to buy raw materials and continue their business as they go on. So what is an accounts receivable aging report? It is simply a way to tabulate your receivables in a periodic report that categorizes a company's accounts receivable according to the length of time an invoice has been outstanding. So let's take this video that nicely explains this for us.
Company managers use accounts receivable aging reports to monitor overdue accounts. The report usually lists each customer's amount owed broken down into different date range buckets. Typically, these buckets are columns titled Current, 31 to 60 days, 61 to 90 days, 90 plus days. Most accounting software programs generate multiple variations of the accounts receivable aging report. A typical report looks like this. In the collection process, ABC's collection department will focus on contacting late company and C company to inquire about payment status. In addition, ABC may send out reminders to A and B about the invoices that are in the 31 to 60 column. Companies often analyze their accounts receivable aging reports over time to determine what percentage of invoices are consistently late or written off. This helps them more accurately predict their allowance for bad debt accounts on their balance sheets. Also, a company's credit department uses the accounts receivable aging report to make customer credit decisions. For instance, if late company places another order with ABC, the credit department may put a credit hold on late company's account until it pays the $5,000 invoice that is more than 90 days past due. The new order will be processed once the late invoice is paid.
As the video mentioned, most software packages actually have an internal aging report for accounts receivable. And this is an important component of almost any accounting information system. Let's take a look at what that will look inside of QuickBooks, for example. So for that, I'm going to take one of our clients, which is a student fictitious business that I can display in here. And this is the interface for QuickBooks Online. Now, from here, I may want to actually, let me switch to a different shop. So in here, I may be able to look at my business overview, and from here I'll have access to reports. And my reports, as you can see, you have different dashboards that provide you with expenses and income and some of the important metrics that you want to have as a business. And then you can generate an aging report for accounts receivable right here. And then again, this is just to find out which types of records are, or which type of invoices have not been paid. So let me take a look at July 1st and run the actual aging report as of that date. And I could just do it on a 7-day basis. And it looks like this particular company does not have any of those companies or any of those invoices past due. I can also go all the way to the 31st and confirm that that is the case. Again, there's only one particular invoice that is still current. If I had an invoice that was past 30 days, then it would show up here as well, and then 60, 90, and 120. So why would anybody engage a team of students to do this if it's already been done in a software? Well, most likely, the businesses that would be engaging you would be businesses that do not have the proper software to generate these types of accounts receivable aging detailed reports. For that purpose, then, we may have to just simply generate an export of data from a different system, or we may be able to tabulate all of the sales and then all of the payments separately in different spreadsheets and look at them in relation to their invoice and when they were paid. There is analytical software out there that makes this type of task super easy. All we have to make sure we have is payments that are uniquely identified by the invoice number that they are supposed to be applied to, and the dates and the payment information. And on the other side, I need a list of all the actual invoices, the due amount, and the date that that particular invoice is due. This software will allow you to join these tables in a manner that will allow you to determine what is the unpaid amount. And then once we come up with the unpaid amount, I'll be able to generate an aging report that is based on whatever aging range you want it to be. It could be 30, 60, 90, 120 days, or it could be weeks, it could be years. Ideally, most businesses are going to want to find out this for managerial purposes, to find out if the credit they're extending their clients is actually adequate, or if they should turn some of these clients into cash only clients instead. Another important factor of this, specifically for bigger companies, would be to make sure that the value of their accounts receivables, which happens to be an asset in the balance sheet, is properly stated. So this is something that happens a lot in auditing, right? You want to make sure that a business is faithfully representing the amount of dollars that they're expected to receive in the near future. And if most of the credit terms are going to be 7 to 30 days, then you want to make sure that none of those receivables are placed as an asset or as an immediate source of funding that the business will have in the near future, and they should be written off. So this goes back to our ability to properly determine whether the financial statements are being properly labeled and categorized in the balance sheet. This is important for banking institutions and for bigger companies, of course, and this would be relevant for purposes of regulation, being able to advise investors on how their company is doing in terms of liquidity. So this type of engagement, under my advice, I would probably teach you how to use IDEA, which allows you to do this types of analysis in a very simple way. There could be an even more rudimentary way of doing this by using Access or even Excel, just to come up with whether some of these payments are being done or not. And ultimately, what we want to see is a report of the actual number of days that any particular company has, and the number of invoices that any company has that is aged more than the target of 30, 60, or 90 days at that point. So this is what the aging report is. Pretty simple. It's just a matter of making sure that you get all the information from the business in terms of invoices and payments that they had, and you'll be able to come up with graphs using software that I'll be able to show you how to use. All right, looking forward to getting some volunteers, and thank you for participating once again.